Welcome back to another exciting episode of Paladin Financial Talk. I am your host today, Ellie Robinson, joined by my always, Tony Scherer.
Yep. I'm here. I'm the co-host. I'm always here each and every week with you and Matt and Jeff and Nikki.
Jeffs, yes.
You guys rotate. I like that.
We do.
Yeah.
So this week is my week.
Fun.
I'm up.
Yep. There you go. Well, you've got a great one lined up for us. But before we get into that, Ellie, I wanted to ask you, you've been really busy lately. You've been meeting with a lot of prospects and clients and helping people. And I know it feels good to be able to help people realize their retirement dreams, help them plan for retirement.
Yeah, absolutely.
It's rewarding for you?
It's been such a blast. I think this year, every year gets better and better, as you get more seasoned into a job.
Sure.
And recently, Nikki Foley and I had launched a new women-only client event series called Women of Wealth.
Yes.
It's not intentionally to exclude men. It's just more of the idea of creating community with women who probably aren't comfortable talking about finances and making sure that they include their friends and family into this community. And usually financial planning, it's not just about one individual or a couple. It usually becomes generational, and things pop up over time with friends and their situations, and we want to have an open dialogue with the people that we are working with. So We had launched this series and nicknamed WOW, Women of Wealth, WOW. So our WOW events.
Wow.
And we had one recently, I think it was just a few weeks ago, end of April here, and we had a very successful event. So we have one coming up next in July. I believe it's Wednesday, July 23rd, if I don't mix up my dates. And we're doing a little happy hour for our clients to bring their friends. We titled the event the Happy Hour Exchange, like the stock market exchange.
And
we're encouraging our friends and clients to bring any old books or puzzles or games that they don't want sitting on their shelves anymore, and just bring it to the event and exchange with people who show up, and just do a casual little happy hour and exchange of goodies.
Nice.
Yeah.
I like that.
Yeah.
That's a great idea.
Yeah. So it's been very fruitful, I think, here at Paladin, and we're all really happy entering into the warm season of Minnesota as well. So
yeah, it'll be nice. I mean, it's been raining and it's been a little cool. I know it's going to stay a little bit cool, but some sunshine for the next few days.
Oh yeah.
For the big weekend we've got here.
For Memorial Day.
Yep.
Coming up. Yeah, I think we're done with rain. We had 3 days of straight rain the last 3 days, and
yeah, we got inches of rain. It rained a lot.
We needed it. It was a little dry here.
It's true. True. The state really needed it. Well, that's great. I know you've been busy, and I think that WOW series you guys are doing is great, and the events have been good.
Yeah, that's fun. A lot of compliments.
Good.
Very successful. So we're happy about it.
Good. Excellent. So I know that May has been the month for spring cleaning. That's been the theme, right?
Correct.
Of May.
I'm expanding on that today, yes.
You are. I can't believe there's a way to expand on this any further than we have the last 4 weeks, right?
I know. I think Quick and Matt both have expanded on, debt repayment and strategies there, and, increasing your emergency funds and making sure that you have your important documents lined up appropriately, whether it's digitally or in a fireproof safe. Make sure, stuff sitting at home, if a fire happens, you want to make sure that everything is safe. So I think they've all touched on some of those harder topics when it comes to financial planning and spring cleaning.
Yeah.
I want to bring to the table today more about portfolio rebalancing.
Okay.
So that's what I'm going to dive into today, Tony. Do you know much about rebalancing at all?
You know what? A little bit, I wouldn't say use the word a lot or words a lot, okay. but I've heard it. When I need to know about portfolio rebalancing, I head up to the Paladin office and just rely on you and the folks at Gradient Investments.
Yeah, I mean, that is primarily my job, right? As a financial advisor,
Sure.
I'm sitting down with my clients in their annual reviews, and I say, hey, where do we need to rotate things? But I think it's good for clients to know in general why we're doing it. I think some people just shake their heads and they don't ask any questions. They're like, okay, Ellie, do whatever you need to do.
Sure.
So I guess this episode will be for the people who want to learn a little bit beyond just the conference room talk and the behind the scenes of why we're actually doing it. So
I think it's good for people to understand what's happening with their money. And, you know, it's probably not a great idea to try to do it yourself, but to know how it works and why is important.
Yeah, I agree. Education is really the foundation of the relationships that I build with my clients, because if I give a recommendation, I want to make sure that they understand the fundamentals of why I'm coming from a certain angle. So having just the bare bones, just knowing just some of the terminology is really helpful when we're sitting down in our annual reviews and pushing along the financial plan as it continues to grow over time.
Right.
So I like to think of your portfolio as a garden. Tony, you might have planted a mixture of flowers and shrubs and veggies, but you don't regularly prune or align what's growing. So some plants take over in a garden, and you want to make sure that you help take care of those plants that are infiltrating in the rest of your garden. So in the same way, if one asset class, let's say that your technology stocks, they perform super well, it can throw off the overall mixture that you had originally invested into your overall portfolio. So let's say that your portfolio had 60% stocks and 40% bonds, which is a very cookie cutter mixture.
The 60-40
portfolio.
Yep, I've heard about that.
So it's usually a very cookie cutter scenario for pre-retirees, which we want to go above and beyond that, but this is just an example. If stocks soar and, over the course of a couple years, your portfolio could become a mixture of 75% stocks and 25% bonds. So that's more risk than what you had originally signed up for, and which usually falls outside of your risk tolerance. And just making sure that we rebalance in the active trimming and realigning your portfolio and selling some of those overperformers and buying more of the underrepresented assets to get back to your target allocation is really what we need to be doing over time. So that is going to be the act of rebalancing.
Sure. But we're talking about spring and financial things to do during spring. Why do it now? Why rebalance at this time? Is there a reason?
One thought is tax season is done. We're done with taxes and people are just coming off the holidays, and markets can be volatile going into a certain year. So we're not halfway through, but we're a quarter of the way through the year. Now is just a good time to assess. I'm not saying that you can't do it any other point in the year, but we like to just think of it as, okay, now that the dust is settled of going into 2025 or whatever year you're in, let's start taking a look at this. Usually we cross it off the list in your annual reviews regardless, but I think it's good for people to know, like, this is on the radar in general. And if it's something that you want to be aware of in the springtime yourself, then have at it and take a look at your own investments.
Yeah, that makes perfect sense. I would agree. So let's talk about actually rebalancing your portfolio. What are the steps that it would take to rebalance a portfolio? What do you do?
So number one, reviewing your target allocation. So I've already talked about this a little bit, but what is your ideal mix based on your risk tolerance and your time horizon and your goals? I really like to emphasize this in appointments when I'm onboarding a client, is it's not 100% on your risk tolerance. We do have to marry that with what is your time horizon to retirement, what is your time horizon with overall life expectancy, and is there any major goals that you're trying to hit in the next few years or long term? So we need to kind of combine all three of those together. Common mixes of portfolios that you could see out there is a 60-40 portfolio like we talked about, 70-30, 90-10 for aggressive investors. So there's certain ways that we chop up portfolios depending on all of those three things: your risk tolerance, your time horizon, and your goals. So number one is just knowing where you lay in that, which most people need a little bit of help with an advisor figuring it out.
Sure. What are your percentages? How much is high risk? How much is low risk?
Yes.
That's what you're talking about when you talk about target allocation.
Exactly. So number two would be actually checking those allocations, right? Not just knowing, but logging into your 401k and seeing what has been thrown out of balance in the last couple years or the last year since doing that. So using your brokerage account or financial dashboard is what's going to help you in assessing your asset classes. There is actually logging in.
Yeah.
And looking.
Right. And for your clients and people you work with, Ellie, and that Paladin works with, if they need help with that, they can come to you and say, hey, What's my current?
Yeah, I mean, that's going to be an easy phone call for our clients, right? They can just give me a call and I'll pull up the numbers myself and I'll just relay it to you. You don't have to log in. But for those people who might be sitting at their computer at 1:00 in the morning, that's when you can log in and not call me.
Sure. But you're not saying you mind those calls. That's what you're there for. You love hearing from your clients.
Exactly.
And that's something you can easily check. And I might be one that relies too heavily on you and the Paladin team. So
there's no such thing, Tony. That's what we're for.
So I'm like, I need to know about this. Tell me where I'm at. And you guys are like, here's where you're at. And you'll show me. I think that's great.
Yeah. Number 3 would be identifying the gaps, right? So once you are actually looking at the mixture, has anything changed over time? Like, are you getting closer to retirement? Which is something that I would help identify with a client. But if you're trying to do this yourself, like, what has changed in the last year? Has your goals completely shifted? Is retirement a lot closer? Just because you had a 60-40 once upon a time doesn't mean that you need to continue to have a 60-40 for the rest of your life, right? Like, there needs to be a active change over the long term, depending on what's happening in your life. So identifying the gaps is going to be your next step there. And then last is essentially just making the trades, right? Which is something that we would be doing here at Paladin. But if you're doing it yourself, like, you actually need to sell, right? You need to buy and sell what you're trying to achieve here. Bonus tip is, when you are doing this in a brokerage account, you are going to trigger taxable events.
Yikes.
So the best type of accounts to be rebalancing are going to be your traditional IRAs, your tax deferred bucket of money. It's not going to trigger any taxes in this type of rebalance. So rebalancing, you need to be also aware of which accounts you're doing it within.
Yeah. So I think that's really good. And as far as when it comes to making the trades and rebalancing and what accounts to balance out or look at, you just mentioned taxes. That's one of the big reasons why the DIYers often can make expensive mistakes, or costly mistakes, I should say. And that's why you do what you do. That's why you're here, is you provide that to your clients and help them avoid making those costly mistakes. And speaking of that, what about some common rebalancing mistakes to avoid? There are a few of them, right?
Yeah, I mean, rebalancing too often too can be detrimental. To, like, there's no reason to be logging in every other week and trying to buy and sell. There is going to be natural movement in the market. And so more isn't always better. Once, maybe twice a year is enough to
Don't chase
rebalance.
Returns or try to time the market.
No, exactly. Like, you need to make sure that you stay on track, and there's usually a reason of why you hear the terminology "set it and forget it," which isn't the perfect phrase, because you still need to set it up correctly before you can forget it. But you don't want to be pushing and pulling too many things within your portfolio yourself too often. That's not going to be very healthy.
No.
Letting emotions get the best of you too can sometimes be detrimental as well for some people. It
can be really costly. People get emotional, in April when the markets started tanking and they were down like 9%, people, I got to go to cash, or if you let your emotions dictate financial decisions, you're going to lose out on a lot of money, probably.
And trying to chase returns. Yeah, exactly. You're right. Yeah. So that I wouldn't consider a rebalancing strategy. That's just more of a trader trying to go in and buy and sell themselves.
Sure.
So, but it's a talking point.
Sure.
Last, I think that could be a mistake made with rebalancing, and I'm thinking of myself in the mixture here, is, not calling your financial advisor back, right? There can be a lot of action items that we talk about in a one-on-one appointment, and I can only do so much. I need my client to follow through on their action items, or
I'm supposed to be following through?
Yes, Tony. I can't do it all. We can't do it all for you.
I thought none of that was on me. I'm guilty of that. Like, this is a great meeting. They really have great ideas in the new walkout. And
I mean, it can be as simple as, hey, provide a copy of your 401k statement. We haven't seen it in 3 years. We don't know what's going on in there. We can't help manage it for you because you're an active employee of this company and you're under 59 and a half. Like, what's going on in your 401k? So just making sure you follow up on any action items with your advisor if we request it. It's for your best interest, we promise.
Yeah.
And making sure that you are following through on your annual reviews, because that is where you get truly dedicated time for yourself, one-on-one with your advisor. It can be hard to just call them on a whim and try to get their full attention for 60 minutes.
Right.
So just set a meeting and make sure that you talk with your advisor and making sure that you look all good in your financial plan.
Yeah. And that's why I like the face-to-face meetings too. I think it's hard to accomplish what you need to over the phone, sitting down face-to-face, and it doesn't take that long.
It really
a 30-minute meeting or a 45-minute meeting. I mean, it's well worth the price of admission, right? Which is low, just your time,
I
right?
hope so.
Yeah.
I hope that's how everyone thinks, Tony.
Yeah. Well, that's how I think. And because I've seen it, I've experienced that. Yeah.
Yeah. And so I think a good reminder for everyone is perfection isn't the goal. And perfection is very hard to achieve for a lot of moving parts in a financial plan, but it's consistency that's going to pan out for you on getting the best returns, getting the best bang for your buck, making sure you save money over time when it comes to taxes, and just making sure that we're actively, sitting down every single year and being consistent with our conversations. That's really what it comes down to.
That's huge. I think that's very important. Well, I'll tell you what, Ellie, this is a lot of great information. And a lot of people probably have never thought about rebalancing my portfolio. What does that mean? What does it entail? Why is it important? And if I try to do it myself, are there mistakes? Yes, and they can be costly. So I like that. Perfection isn't the goal. Consistency is. And long-term results are the goal.
Correct.
Right?
That's what we're going for, Tony. We're trying to get you to retire.
Yeah. Oh, I know. The pressure's on, right? You're trying to, at this point, it's like, Tony, retire.
No, I didn't mean it like that.
No, I know. But yeah, a great show, great points. But if our listeners out there say, hey, I'm not working with a financial professional, or I have in the past, but I want a second opinion, how can our listeners out there get a hold of you to set up that no charge, no obligation consultation?
I think the easiest way is to call us, right? So 651-842-8406, where Lindsay and Carter are our go-to people who usually answer the phone, and you can just get an appointment scheduled through them. But all of us advisors, we all have our complimentary consultation intake appointments offered for anyone who comes through our doors or wants to set an appointment. So we're happy to give you that consult and see if we would be a good fit for you.
Yeah, and for extra special attention and treatment, mention that you heard about it on the show.
Oh, that's true. That's a good point,
Ellie
Tony.
told us.
Okay,
Ellie told us.
We need to start giving out some little discounts if they listen to the podcast.
There
all the
you
way
go.
through.
Ellie told us. Well, there's no charge for those consultations anyway.
No, there's not.
But yeah, maybe you'll let them, you have snacks and beverages there for folks when they come in.
Yeah, our clients love it.
Yeah. Well, even if you're not a client, if you mention you heard it on the show, we'll
give you some extra treats.
Yeah, exactly. Well, this has been a great show. If they want to check out the website, what's the Paladin website?
I mean, it's www.paladinfinancial.com. Pretty simple to remember, I think.
Yep, paladinfinancial.com. Great show today, Ellie. And that does it for today's episode of Paladin Financial Talk with our host, Ellie Robinson.
Thank you, Tony.
Yep, thanks.